Hey all, welcome to ShareTreck. This is Raj here. Friends, today we're going to talk about NTLA Therapeutics. They had a press release, and the most important thing that I see in this press release is this particular paragraph which says the pipeline prioritization is intended to focus resources on high value programs like NTLA 2002 and NextZ to ensure sufficient execution, achieve near-term clinical milestone, and prepare for Intelia for commercial launch as part of this prioritization. And the company has discontinued the development of NTLA 3001 for the treatment of alpha-1 antitrypsin deficiency associated lung disease and select research stage programs. Over the course of 2025, the strategic reorganization will result in a net workforce reduction of approximately 27%. So I can see positives and negatives both in this particular article. The positive is that a reduction of 27% of the net workforce would mean that you have a cash runway that is much longer, because employment expenses are one of the bigger expenses in the income expenditure statement of most of these companies. So that's the positive. The negative is that all the money that was invested in NTLA 3001 and a few other preclinical research, it's all going to go for waste, because they have discontinued, and it's not like they have sold it to somebody else, or they're not saying that they're keeping it on the shelf for use later on, which means that there has been some amount of capital that has been burnt out without any value. Now, if we were to go in and have a look at the Intelia price chart, you can see that the market had already been pessimistic about Intelia, and it has been on a bear channel, I think all the way from 17th of July 2024. It was on a sustained bear channel, and even before that, if you see, the market has been losing confidence on Intelia, because we have not seen anything major come out of Intelia that could give us an idea that they are very close to monetizing anything. And the fear, therefore, is always the cash burn and equity dilution or the potential for failure. We have seen Intelia on this news break down below the bear channel that we already had, and the vitals are also looking very weak. So the market is not taking it very kindly. Usually, if you were to look at news coming out like this, where a company says that they are reducing their workforce by approximately 27%, then you'll see a spike in the share prices. But in this case, it's not happening, because these pipeline items are still very far from monetization, and therefore the company doesn't seem that attractive to most investors. If you look at this pipeline here, it's not like the pipeline is huge. There are very few candidates out here. The investor is not feeling too happy, I think, looking at this particular pipeline, because we have got 2 candidates in the late stage clinical trial. We don't have any news about any impending BLA. We don't know when the light at the end of the tunnel is going to come up. And we already checked out one huge program and a whole lot of preclinical program. Because if you look at research and preclinical, we just have a heading that says research programs for extrahepatic targets and immuno-oncology. There is one set of research programs. There's not much information out here. So the lack of transparency out here and the lack of any immediate signs that there could be monetization is also another factor. Even if the market knew that 1.5 years down the line there will be monetization, that could be a little bit of hope for the market to cheer the price. But right now they are not getting anything out here. Another thing that we need to look at is the fact that the company expects to incur charges of approximately $8 million associated with the reorganization, which are anticipated to be incurred in the first quarter of 2025. So that's $8 million down the drain. And Intelia ended the fourth quarter of 2024 with approximately $862 million in cash equivalents and investments. The combination of its cash balance and the anticipated cost savings are expected to provide the company with cash runway into the first half of 2027. So at the end of the first half of 2027, either we need to have some monetization, some milestone payments, or we are looking at equity dilution. So all these things put together has put a damper on this company, and that's what I think has happened with NTLA. So as a result, the market has started dropping. I think NTLA is looking quite weak. Pre-market, they're up 0.36%, but all these are because of the interest rate expectations, inflation expectations. So once we have inflation report today, the markets may either go up or down, and that could give an opportunity for NTLA to recover a little bit. But overall, in the long term, I think at least for the next 6 months, unless there is a positive catalyst, I think despite a temporary spike, NTLA will continue going down. Of course, these are my personal opinion and not financial advice. So guys, be careful. And I would like to know what the community thinks of NTLA shares, and is there some hidden catalyst that I'm missing? With that, my friends, I'd like to bring this video to an end. Thanks and have a great day. Bye for now.